Hello traders, Matt Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is Friday, the 23rd of June 2017. Hope you're looking forward to the weekend. Got a level here on the Aussie Swiss. It's been a big old level, even on the weekly chart. It's a daily chart, obviously. And what I want to pay close attention to is the price action in and around here. And let me just grab a line. So what you have when price is very accurate at a level, so touched once very accurately, twice, thrice, and in here is you get a build-up of stop losses. So if I was to draw where the stop orders would reside, be somewhere around there. Obviously that doesn't include everybody. Some people will have stops further away, right? It's a little bit more sporadic, but people are trying to manage risks, so the orders cluster around these levels. And as price comes back into this level, you'll notice that it bounces off the level twice. It bounces off once, bounces off twice. So at the hard right edge, let me just clear this up. At the hard right edge, this would have looked as if it was heading up. So imagine we didn't know any of the future. Let's get rid of all of this, pretend that wasn't there. Right, that's all we know, and we're basing our analysis off these historical structures. Price comes back into the level. Now look, it's actually an outside candle, takes out the low of the prior candle and then closes. It doesn't totally engulf the previous candle, but it looks bullish. You get two. These are obviously bull candles, even though I'm drawing in red. So you get two candles going up, right? So hard right edge. And this is what people fail to pay attention to, and people focus all of their attention on the price action in the here and now. So this looks as if it was working as it had done here, as it had done here, blah blah, right? And that's what makes people come in and take some risk. And if you were going long there, you know, your profit targets are anywhere of these swings higher up. But what is, you know, that's slightly less obvious, because there is so many swings. You know, it depends where people are going to pull it off. If it was just like a clear run with no real swings, then it's quite obvious where people would take profit, right? But the more important thing in this particular example is where the stops are going to go, and the stops are going to go below this well-defined level. That's what's key. So you're going to get a build-up of stops, because it comes back in there a second time and draws a group of traders in again to go long again, right? Same in here, go long, the place of stops below these levels. So price comes crashing down through the level and it stops those traders out, so essentially hits those stops, right? Stop hunt. Now then, as it breaks, there's another phenomena that occurs, because when you've got a well-defined level like that, what happens is, you know, the more that level's touched, people believe the stronger it gets. And when it breaks down through the level, what's very typical is you'll get breakout traders piling into that, because it was hit so many times, they'll think that the pop from that level will be super strong, and that, you know, now price is off to new horizons, and that draws people in, that breakout stroke momentum type traders. So traders go short in there. Now then, if you're going to be doing some buying, it's nice that those stops get triggered, right? Because if you're buying off this level, those traders, their stop losses equal sell orders, and those sell orders, as price comes down through that level, they get triggered, and that allows something of size to do some, you know, big buying, because they'll buy in the face of selling, and that it's forced selling as those stop losses get triggered. But to add insult to injury, The breakout induces sellers in willingly in here to go short, and then there's a break pullback. It's not so clear on the daily, but if you went down into the lower time frame, what you would see is that essentially, which is that wick. You don't see it as like a closed candle or anything. It's a little bit nuanced, but it is there nonetheless, right? So support breaks, becomes resistance, and that in that wick is where it sells off. That would have enticed retracement sellers to go short as well. So not only do you have the breakout traders getting drawn in to go short, you've got the stop losses of those previous touches getting triggered, right? So selling through the stops, selling through the breakout, selling through the retracement, and something big has been able to buy in the face of that, catching all those traders and stopping some of them out as well, because obviously if you went short in here, you're probably going to place your stops above these swings, so that's going to add to the demand equation. So this pullback into this level looks like a pretty decent place to take a long trade. Make sure the stock market's going up, and then this makes perfect sense as the Swissy will weaken. And if you'd like to come and join me in my brand new inner circle, click the link below. Love to see you on the inside. Have a nice weekend. Take care.